Good day. Ira Epstein with your financial market wrap-up. And we are now on Tuesday, February 18th, 2020. I'm still not used to 2020. It's going to take me a while. In any case, we're after 4:30 p.m. and we're before the reopening of the markets. And this is where you finished out today. So we had most of the stock indices lower, but they did recover nicely off their lows, as you can see. So far, each of the big breaks we've had in the stock market basically well supported. The gold market was a powerhouse today, up $17. Silver up over 40 cents for a change. Copper, platinum, palladium all gone up rather dramatically. They took the palladium, which is already a crazy margin. I think it went up 10% tonight, over 22,000 a contract. So something to look at for people there. In the dollar index, we're approaching, as you know, multi-year highs here. And most of the currencies down as the safe haven buying still drove the bonds and the notes higher. The Japanese yen pulled back a little bit on this. So we're still seeing an interesting twist on things. Energy markets trying to stabilize, bonds and notes, interest rates keep falling, the dollar getting a bid, and it doesn't matter if the dollar got a bid to any of the metal markets, which are often negatively impacted by a rising dollar. As for the S&P, well, it's the first day of a new week, so the market's down 11 points. But you really haven't done any damage to this chart when you look at it. And when we take a look at a daily bar chart, here's the interesting part to me. We had an outside day down, a key reversal day. Now, the difference is this. A key reversal occurs at the highest high of a move or the lowest low of a move, either one. An outside day can happen anywhere in between. So this is that combination. What don't I want to see? Well, if you think the market's creating a trading top, what you don't want to see is today's highs taken out. If that high's taken out, then it's a rejection of this particular pattern. When I look at the swing line study, I have a pretty clear pattern of higher lows, higher highs. Maybe we're getting into a trading top pattern. The 18-day moving average of closes, well, that's what I call the line in the sand. And if the market breaks down, I'm still looking for 33.16 to be a support zone. And that number is moving, if you look at it, about 3 points a day on average. That doesn't mean it'll keep going that way. So I'm looking for tomorrow near the 33.19 to 20 zone to be the support in the market. Where's the resistance? The upper Bollinger Band, and you're not there. The market did not peak out against that number today at all. And when you look at momentum, you still have the embedded reading. Now, for those of you that get my morning subscriber video, you know this market was down hard when I was recording the video. Not a surprise. And the one thing I kept saying is until you lose the embedded reading, this game isn't over on the upside. Lose that, and the most I'm looking for anyways, well, the word most is wrong. What I'd be looking for is the 18-day average. The most can be anything because I'd have to see what the chart patterns look like at that time. Do I think that the supply chain disruption is enough to really end the bull market we have? I'm going to go on record. No, I don't see it as that just yet. In the NASDAQ, we have an outside day to the upside. So a warning sign would be if you take out today's lows on Wednesday or Thursday, that the market could be in trouble and holding on to this momentum gain into new all-time highs today. In the Dow, unlike the other markets, do we have an embedded reading? So let's look. Both numbers at the close were over 80. Both numbers at the close on Friday were over 80. And the day before. So you've got your embedded reading. It joined the parade today. Until the red line closes under 80, I'll look for support in between the low today and the 18-day average of closes. Lose that reading, and then I'm looking for the 18-day. So interesting time frame in the sense that the market's pulling back. What would do damage to the chart? Taking out the lows of the recent swing line low of 28,850. In the Russell, the market made a higher high, a lower low, or did it? Well, today's low is 1672.60. That did take out this 1673. So you got the higher high and a lower low, and no, you did not embed. This has been the dog, if you will, of the market. It's the one that hasn't joined the parade. You've got 3 out of the 4 major indices with bullish embedded readings. In the cash VIX, you pulled up, took out this old high of 1544, went right to that line in the sand basically and stopped. Today's high 1549, the 18-day average 1550. Oversold market that was able to find its traction, its footing, at the 100-day average of closes. Are we bullish, bearish? I don't think you're either right here. It appears to me you're out of a trend. You've got support between the 100-day average and resistance at the 18-day average. In the bond market, momentum is trying to swing back to the upside. Yes, we have been in an uptrend, that's pretty clear, and we haven't been able to get under that 18-day average on a close. If you should take out 161.26, that could be a warning sign, because that would give you then a higher high, lower low. You don't have an embedded reading, so that's the number I don't want to see if I'm bullish. What do I want to see? I'd like to see the market make the first challenge of the upper Bollinger Band so that those who are long might consider taking profit wherever that number is. Why do I say profit? Well, the bias is up in this market and that market, so I am assuming the pros are long when the bias is up or down, and the trend has been up as measured by higher lows, higher highs. Doesn't mean I'm right in that analysis. It's just what I have to assume as a chartist. In the 10-year note, I'm assuming the trend up, higher lows, higher highs. This market resolved itself in a way today. If you look at Friday's action, you had lower highs, higher lows. Then you followed through today. Now what would break the trend here is taking out the 130 and a 23.5 zone. So that's the number you don't want to see taken out. If the market lifts, I'd expect to see pros trying to take money off the table against the upper Bollinger Band. In the dollar index, we've got a pattern of higher lows, higher highs. Now, what's been so bullish about this market is that it's kept the embedded reading, number one. Number two, it did get ahead of itself here. It had 5 days in a row over the upper Bollinger Band. Then it pulled to the right-hand side, and it's just kept going on. 95% of the time, the market will trade within the black bands. It's rare that you settle more than 6 days in a row outside of them, as I've explained over and over. In the Eurocurrency, you get under the band, you get back over it, it's back and forth, you've got the embedded reading. You know, this market's reminding me now a little bit of the coffee trade that if you watch the ag ones. I said in that trade, you know, you had gotten down in this huge vertical drop. You've really come from 113 down to 108. You got to be nervous that you haven't had any sizable correction yet like you had here. This was healthy. You kept the trend, lower highs, lower lows. The embedded reading keeps me saying to you that on rallies, the pros should be there selling this market, I think. In the Japanese yen, we had an outside day down. That means we took out Friday's high and low and closed lower. Should today's high be taken out, then I'd be concerned that the market's going to make a run if I were in the bear camp back to the 18-day average. Is the chart bearish? It is, in the sense that you've got lower highs, lower lows. What about the reading of the slow stochastics? It's oversold. So as bearish as the chart is, it is oversold. If the market should break down, I'd look for support at 90.71, the lower Bollinger Band. If today's high is taken out, I'm going to look for the market to work its way back to the 18-day average to figure out what next. Bitcoin. The first challenge of the lower Bollinger Band held, but there is a but here. You lost the embedded reading on the close. The only day you can get it back is the next day. The downside here hit the objective when you lose an embedded reading. Market also got under 95.10, so we stepped out of that uptrend. We've got a lower low and a higher high. I wouldn't be surprised if we get consolidation in the market, and this is the beginning phase of it. In Brent versus WTI crude, what do I tell you? Look at how this market's come roaring back from the 350 level, and now you've got a market that's back to 546. You've got the Brent creeping up and over the 18-day average of closes, finishing off about $1 over it. Now look at how this market's just come back roughly $5 a barrel. So as much as we keep hearing there's too much oil, the markets are washing it, and I was on Bloomberg today, there's a number where you can't change world demand. And while you get to a point where, yes, industries can shut down, you still need to drive your car, heat your home. There's other things that are going on. And while China is a major world consumer of crude, it still has to keep its teapots going, and I told you were getting them buying in the market last week. First time we saw that, if you get my newsletter, in a long time. That's the independents for buying cargoes that were sitting offshore. They thought the discount was right. They look pretty brilliant at this point if they can get that product moved into the market. In our WTI crude, the market's back and fighting at the 18-day average of closes. I question, unless you get a bigger issue with the COVID-19, in other words, the coronavirus, will you be able to get back under these recent lows? Because this was the first stage of a panic. And I was frankly impressed today hearing Apple talk about how it's going to have a bad first quarter, how its supplies are in jeopardy until these factories get up and where they're going to make up the goods. And the market is going to see other companies jump on that parade. It didn't fall apart. That was pretty impressive. In the gasoline market, an outside day up. So what don't I want to see if I'm bullish? I don't want to see today's lows taken out on Wednesday or Thursday. Otherwise, this is a bit of a bull trap. Let's assume it doesn't do that. Where's the resistance? The combination of the upper Bollinger Band, 176.31 to 178.38. I am not at all surprised on this rally. I told you, seasonals kick in at this time of the year. It's hard to believe that in February you often get a spring surge in price, but if you go back and you look at the seasonals, in other words, history going back, I don't care, 30 years, there's a 15-year, there's 5-year charts you can look at, you see that tendency for the market to do that. Last in the nat gas, we're getting two waves of cold. We're getting one right now. I know Chicago's going to feel it, and then we'll warm up for a few days, and next week we drop off again. But as the calendar moves forward, you're going to get fewer and fewer of these days. The interesting part is you had a shot, or the bears had a shot, should I say. Back here, when you hit the lower band, again, you hit it here. They might have gone short, but I think they take money off the table there. And this was the signal that momentum had changed. And you can see the market's rocked. Then when it got back over this high, this was last Friday, you went right up and magically stopped at the upper Bollinger Band. I think a lot of people watch these numbers. I want you to remember that we write about all this, and we write about it in a lot of detail. So it's a question of whether you like the energy markets, the metal markets, you want to get a flavor for what interest rates and the financial markets are doing. Our firm all day long is writing emails, reports. They come to you in your mailbox. They also go right into our charting software. A lot of people like me, I'm not interested in reading it as an email. I'm reading it in my different versions of the charting software, and I'm able to set them up in any categories I want, even further than that, by the way. You can take it even further in our charting software and get all the information in a way that's easy to read. How do you get this, and how do you get a trial of it? Just go to our website under free offers, sign up for the different ones that you want, away you go, or call my staff during the day. They'll get you all set up. I'm Ira Epstein. Thanks for watching. I'll talk to you tomorrow.